According to Reuters, JPMorgan sees gold at 6,300 an ounce by year-end on strong central bank and investor demand. This is how they view it. 6,300 in this year. The Guardian, gold and silver prices seesaw as the FTSE 100 hits a record high. Kitco, gold price edges higher, but gains are limited by a silver sell-off. Down 24, gold and silver lose their shine after record gains in recent months. Vietnam, experts warn of a wave of speculation as gold and silver prices reach a peak and then fall sharply. Recent volatility after record-breaking rallies at the end of January and the beginning of February 2026, gold and silver prices experienced a strong correction. Gold fell from levels above $5,600 per 1 ounce to lower levels, much lower levels, while silver lost as much as 30% in a short period of time, the largest percentage drop in many years. Previous records. Not long ago, both metals were hitting all-time highs, silver above 120 per ounce and gold near $5,600 per 1 ounce, mainly due to strong demand as safe haven, investment and low interest rate. Global commentary. International media and analysts are divided on whether the recent surge represents a long-term trend or a speculative bubble. Some experts warn of a sharp correction following rapid price rallies. Outlook from major players, some financial giants such as JPMorgan, continue to forecast gold price rising to as much as $6,300 per 1 ounce in 2026. Citing increased demand from central banks and investors, silver is harder to predict, but analysts expect a strong price flow than in previous years. But we have to have in mind that silver price actually increased 250% in last year. What are foreign media and global markets saying? In the United States, reports from the US market show mixed signals. Gold and silver prices plunge. Many financial outlets write about sharp declines following record highs, driven by profit-taking and reduced demand for safe haven assets. Wall Street analysts note that political tensions, such as the appointment of the new Federal Reserve Chair, are strongly influencing investors' sentiment and increasing short-term price volatility. In Great Britain and Europe, British media describe recent market as a meltdowns, as a pullback from previous records and a sign that financial markets may have moved too far, too fast in their optimism. Commentators in the City of London suggest that despite the correction, the upward trend in previous metal prices remains intact, though likely with less momentum. In Vietnam, in Asia, sharp increases in gold and silver bar prices were observed in local markets, with partial rebounds following global declines. Analysts, opinions and commentary around the world are different. Some experts warn of a wave of speculation and possible next phase of decline after peak prices. Others emphasize that the high level of volatility resemble crisis-like conditions and require caution from short-term investors. Key takeaways. So what actually happened? Gold and silver previously hit record prices, followed by a rapid correction. Markets reaction to geopolitical factor, Federal Reserve policy and major global investors. Global narratives. US media focus on plunges, sharp decline after a series of records. UK media emphasize volatility and the risk of potential meltdown. Asian reports show fast rebounds and local price peaks. Global investment banks still see room for future growth prices, especially for gold. After historic rallies in the precious metals market that pushed gold and silver to record levels, we are now witnessing extraordinary volatility. Global media from the United States, Europe and Asia report sharp price declines that at times have been the largest in the decades. Experts remain divided. Some see continued strong fundamentals supporting precious metals as a hedge, while others warn of speculative excess and the possibility of a longer correction. In the dynamic environment, investors around the world are closely watching every signal from the Federal Reserve, geopolitical tensions, and market sentiment that may determine the next major move in gold and silver prices. Well, what am I thinking about the future gold price? Is today's price the highest price that we will see for decades or years? Well, if we just think about it, and if we try project gold price for next 10 years, from last stop, which was $5,600. So if we use this compounding interest calculator, if we add 10% every year, then in next 10 years 1 ounce will be $14,525 for each ounce. So from today's 5,000 to 14,525 in next 10 years. This is quite conservative thinking, 10% a year. Well, we have to remember that in last 12 months the gold price actually gained 100%, silver gained 250%. So, well, may we think that gold price could go up by 100% a year? So, in this case, if this will happen, then the gold will be as valuable as diamonds. Diamonds, actually, for 1 ounce of diamond, you have to pay around $1 million, $2 million, $3 million. Some diamonds are worth $5 million. So if we think about it, and if AI will invent some technology that uses purely gold, and gold is the most important metal on earth, then the 1 ounce of gold that actually we are not able to create in such science fiction scenario, then gold can cost the same as diamonds. But diamonds we can create now. There are diamonds that we can create. Humans can create diamonds, but we are not able to create gold, as the gold is something that been created when suns explodes, when stars are exploding. This is how it is. So we are not able to create gold. So if we think about it, and if we use compounding interest rate 100% per year, then in next 10 years 1 ounce of gold will be $5 million and 734,000. Well, this is a kind of science fiction, $6 million for each ounce of gold. But today, 1 ounce of diamonds cost actually $1 or even $2, $3 million. Well, we don't know what will happen in future, but if we think conservatively, in next 10 years, gold will reach around $14,000 in science fiction scenario, when an AI will invent some kind of technology that will take us to the stars. Then gold may cost $6 million in the science fiction scenario. Please subscribe my channel.